Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A counter-reactionary bearish dark cloud cover pattern yesterday after the previous session's reactionary bullish white Mariposa. I suppose it was an unsurprising move, as though prices had moved up over the dark blue upper bear channel line, it's currently at 64.94, and that's of the impromptu May and July to date bear channel, currently at 56.61 to 64.94, as well as over the flatlining gold long moving average, currently 65.72. Well, it was a hard ask given the amount of energy needed and expended to achieve what the market managed to do. Plus, overhead, we had the somewhat surprising capping action from the bright red neckline extension, currently at 66.31, of the March to May 2020 reverse head and shoulders bottom. To be honest, I'm somewhat surprised by this cap, and as I said yesterday, and I quote, a little dubious about the move higher, as the previous week saw a similar attempt higher that got quickly batted down, so take care, end of quote. Below we have the base of recent action around the mauve medium moving average, currently at 63.94, and the 38.2% Fibonacci line of the April 21 to March 22 move at 63.02. Overall, I am just starting to wonder if the action through most of January is either a double top with potential down to the lows of January, or a possible bullish halfway hesitation, with aspirations up to the 69 to 70 even area overhead. Now so far today, a slightly higher open, but getting capped by the gold long moving average and heading back down to rest on that breached dark blue upper bear channel line, though no push any further. Spot gold. A gapping higher, indecisive spinning top yesterday, but with a long tongue on top, that together made a new all-time high and high close. There are elements that could make you think this was a shooting star pattern, type 1 bearish, but not enough to label it as such. It was nevertheless the sixth bullish white soldier here. Interestingly, though we spike higher and above the dark blue upper time, currently at 50.36 of the mid-September to late October bullish shift pitch walk, prices still fail to close over it. Now looking above, well, we have the 100% projected Fibonacci line at 51.99 and an even higher 100% projected Fibonacci line at 54.48. So far today, a move higher through the dark blue upper time, though still within yesterday's general range. For information, the nearest GAN numbers are at 50.85 and 50.94, plus the nearest compound GAN number is at 51.03. Bitcoin. A combined immediate countering bullish Harami and bullish opening white Mariposa yesterday, after the previous session's very sinister bearish opening black Mariposa and second bearish black crow. The market has made a reactionary move back up after the previous session moved down and closed below the bright red neckline extension, which is currently at 88.036, of the August to October reverse head and shoulders bottom. This neckline has been in the recent past a key support, especially on a consecutive closing basis, as it had formed, despite its piercings, none of which had seen more than one close below since November last year. It had formed the lower trend line to a small, shallow bull channel. The upper trend line was the purple November 24 to February 25 double top neckline, currently at 97.337. What had added to the overall bearish pressure was the failed early December 25 to January this year bullish cup with handle pattern, and how this failure has opened up some thoughts on the whole action, since possibly as far back as early October last year to date, being a possible bearish halfway hesitation action. This would need very, very close consideration should prices stabilize below the bright red neckline. Thus, looking lower, we have the 38.2% Fibonacci line on November 22 to October 25 move at 83,987, and the 50% Fibonacci line of the January 24 to October 25 move at 82,379. It is, as I said last week, and I quote, "In many ways, this is starting to look like the Alamo on a consecutive closing basis for bulls on any attempts lower." End of quote. Now, so far today, a small move, back lower, testing that bright red neckline extension, but not really pushing below it as yet.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.